13. Payroll accounting, taxes, and reports. Section 1. Recording a payroll. Payroll info for each pay period is recorded in a payroll register. Payroll register and employee earnings records provide all the payroll information needed to prepare payroll and payroll tax reports. Journal entries are made to record the payment on the payroll and the employer payroll taxes. Payroll register. This is similar to the special journals that we've done. Column totals provide the debit and credit amounts needed to journalize payroll. Payroll journal entry. This is based on the totals of the earnings total column, each deduction column, and net pay column. Which is not used are the totals of the earnings regular and earnings overtime. Also the deduction total column. So here's an example that we have. So we have our totals for each column. Now to put each total into a T account, we start with our total earnings. This is our salary expense on the debit side. Then we start going to the right for each deduction. So federal income tax goes to employee income tax payable. Social Security goes to Social Security tax payable. Medicare goes to payable. Health insurance, payable. The other, you'll notice that there's two little letters there. B goes to US Savings, and the UW goes to United Way. Next, we have our cash. The difference between our salary expense and the total of all our tax payables, or all our payables, would be our cash, which is also our net pay. Then, when you journalize it, it goes with the salary expense, debit, everything else for payable, credit, and the cash goes in the special column on the right on the first line for salary expense. Let's do the work together. So from your work together, we're going to use these amounts to fill in our T accounts. So we start with total earnings, goes to salary expense. Federal income tax goes to employee tax, income tax payable. Social Security tax withheld goes to Social Security tax payable. Medicare goes to payable. And since our net pay is not listed, we just take the difference between our salary expense and all our payables and put it in our cash, which is $10,450.10. Next, to journalize it, we always start with our date, July 15th. First one will be salary expense, employee income tax payable, Social Security tax payable, Medicare, and lastly, to make sure that our debits and credits balance, put our cash in. Now, you do the on your own to make sure you understand it. And don't forget about journalizing it. And that's section 1.